Hi, I'm Owen from Rask Australia. In this video, I'm going to talk to you about what is the share market really, what is investing, and what is trading. So what is the share market? Imagine for a moment that instead of calling it the share market, we called it the business market. Because at the end of the day, when you buy and sell shares, what you are actually exchanging with another investor is an ownership slice of a real business. So when you buy a share in your brokerage account, what you're actually becoming is an owner of a real business. Now, what is an investor? If we know that the share market is actually a place to buy and sell or swap ownership stakes in businesses, what is an investor? An investor is someone in the share market who focuses on the business first. So what I mean by that is they focus on the fundamentals. That's a word that you'll often hear thrown around by investors who are looking at a business for the long term. So an investor typically owns shares for 3 to 5 years. At least that's the hope. And why do they own shares for 3 to 5 years or the long term? The reason is pretty simple. An investor benefits from the growth within the business. So not necessarily the growth in the share price, but the growth from the business. Whether it gets more customers, more sales, and more profits, maybe even pays more dividends over time. That's what an investor is focused on. So what is a trader? If an investor is long-term focused, looking 3 years out into the future, a trader can be looking even up to this minute, meaning they could be looking at buying and selling in the same minute because they're not focused on the business always. So what I mean by that is, whereas an investor is focused on profits and cash flows and debt and all these different things that you've probably heard, a trader is focused on two things and two things only. They're focused on the volume, which is the number of shares that change hands. So the number of shares traded typically every day. So it might be 5,000 shares are bought or sold on the share market in a particular company each day. The other thing that they focus on is price. So we've got volume and we've got price. Price is as simple as it sounds. Price is just the share price. So what is the share price doing? Using the number of shares traded and the price, so does it go up? Does it go down? Is the share price up 2% this day, down 4% the next day? What does that tell you? A trader is focused on those two things to try and predict what might happen next. A related, strategy to this is something called charting. So we've got trading and now we've got charting. Charting is a type of trading that most people who do trading actually use. So charting is actually just looking at a share price chart over time and drawing lines or predicting things with patterns like triangles, or if there's peaks or resistance, meaning, does the share price struggle to get past a certain point? Or is there support? That's another word you'll hear, support. That's when the share price falls to a certain level. And then a trader will try and predict whether it's going to go below that or whether it's going to come back up using the charts and using something called the volume bars. So when you look in your brokerage account, a trader typically will have the volume bars, and they're represented as a bar chart, at the bottom of the share price because they're trying to find the direction of both volume and price. So if we know what an investor is, being a long-term business-focused person, and we know what a trader is, being potentially more short-term focused and more active, what's right for me? Now, this is a question I can't answer in this video. It's a question that you need to discover for yourself. Are you more suited to being a long-term investor and focusing on the benefits of finding good businesses and owning them for the long term? Or are you willing to be more active and take a shorter-term approach? There are pros and cons to both of these, including things like tax and costs, which are often higher with short-term trading versus long-term investing. I would encourage you to go now and look at all of the different material on this. Take your time, take a few days, take a few weeks to do your research on the different types of strategies within investing and the different types of strategies within trading. And always, before you sign up to an investment program or strategy or some type of membership service, make sure the business that you're signing up to has an Australian Financial Services License, an AFSL. You'll typically find that printed somewhere on the website in a document particularly called a Financial Services Guide, or an FSG. If the company does not have an AFSL in Australia, then that means it does not have a license to operate a financial services business. and therefore it might not provide the same protections for you if you decide to go with that strategy. You can check the AFSL of any business on the ASX website. I'm Owen from Rask Australia. Thanks for watching.